guys, you are welcome to today's episode. My name is Rita Chidi, and in today's video I am going to be uncovering all that happened last week and what to expect this week. Every forex pair has its own personality. GBPJPY is highly volatile, and how can one approach GBPJPY? How can you trade it, comfortably? A lot of traders fear GBPJPY because they think GBPJPY is a beast. Yeah, actually, GBPJPY is highly volatile. But if you master this secret, this strategy that I'm going to be sharing with you all here, you are going to be trading GBPJPY comfortably and with ease. I am going to share a simple strategy that you can always look out for every time trading GBPJPY or even any other pair. And in my last video, I did a full tutorial on how to use advanced market structure. So if you've not watched that video, go check it out. It is packed and filled with lots and lots of information. I have a free trading ebook that I'm giving out to all my viewers. Check the description box to get it. In today's video, I'm going to show you how I was able to catch this move, because the week before this week that just ended, I spotted this sweep right here, a sweep and a BOS, break of structure, BOS, and then structure liquidity that the market will have to take out first before it continues its move. So structural liquidity, and since I spotted a sweep here, break of structure, I knew the market was going to go up, because this was where the market was at before this week started, and I knew it was going to go up. But it wasn't easy because it was going up, coming down, going up, just like his usual thing of how GBPJPY do. It will go up, come down, go up, just to toy with your emotions. But if you know what you're doing, no matter what you do, you will stand your ground. So a sweep, a break of structure, and market now starts buying. And it's buying to come to this other block. So, and stop loss will be here slightly above it. Stop loss will be here slightly above it, something like this, if you enter here or here. Stop loss will be here, and TP will be first TP here, second TP here. All right, so because to be honest, nobody owns the market, so we are just predators and we're speculators. We're just speculators, so you predict. If you play out in your favor, fine. If it did not play out in your favor, you move to the next. That's why risk management is everything, is the bone of trading. You must learn your risk management well. Proper risk management is the key to it. So do not over leverage, do not over risk. Calculate your risk before you take that step. Before you take that move, you would have determined, you would have calculated how much are you willing to lose before even going into that trade. Don't ever risk more than you are willing to lose. Always risk what you are so willing to lose, in case if anything happen. If you win the trade, fine. So because protecting your capital is more important than making profit, so you should always have this at the back of your mind, to protect your capital rather than looking for ways to make profit. Yeah, if profit comes, fine, beautiful, you thank God, but Your duty, your job is to protect your capital at all times. You protect your capital. Let's get down to 15 minutes, so where you can now see all the drama that played out. I can tell you everything that happened with this pair because I was on this trade. So as the week started, it started to buy, which was good, but it got to this point, it started ranging. So you see, it started ranging. Now, if you're the type that don't go to your higher time frame, seeing this downtrend will make you panic. Seeing this downtrend will make you think, oh, the market is still on the downtrend. The market is still gonna sell. So because it started doing this nasty range, consolidating here, and if you're not sure of your analysis, you might think, okay, still going to sell, or you will fear and close your trade. You will fear and close your trade, or you will not even take the trade at all, because it actually did that. So as it was ranging, the next thing, there was this news and it spiked down. This was where I entered another position. Why? Because I'd already seen break of structure right here, BOS, and change of character right here, chalk, change of character right here. So what am I now expecting? I am now expecting that the market is going to come to this other block. Meanwhile, I was already in the trade, so I was expecting, okay, if market comes to this other block, I will enter another buy. But if it did not come to this other block, no problem. I will wait for the market to break this, come out of this range. But finally, it tapped here, and if it had broken this low, I would have exited the trade. But since it did not break this low, so I entered another position right here. It break this structure right here, a break of structure, another break of structure right here, BOS, another break of structure right here, and then it comes to this. So your duty is just to be identifying fair value gaps and other blocks. There's a fair value gap here because market will always come back to fill it. So you see, there was this fair value gap here. It came back to it, it moved, it still came back to this one again, and it finally moved. So as it moved, it started breaking structures to the upside, break of structure, a pullback, break of structure, a pullback, BOS, break of structure, a pullback, break of structure, a pullback, break of structure again, a pullback, break of structure. So after every break of structure, there must always be a pullback. So break of structure, pullback. So the break of structures continued to break the structure and a deeper pullback. All this was what happened from Monday to Friday. A break of structure, a deeper pullback. So you see, it break this structure, it cleared this liquidity. A break of structure right here, here is the liquidity that the market will have to clear before it continued its move. So liquidity, fair value gap, and other block. So market will always come back to it. And here is you can have your stop loss here or here. To be on a safer side, it's always good to have a wider stop loss. So your stop loss here, a break construction to the upside, liquidity cleared. Always identify fair value gaps. Fair value gaps, order block. You see, it tap on it, it came back to retest it multiple times, retested it the first time, the second time, the third time before it now move. So it retested it the first time, second time, the third time before it now move. So of course you know that the moment a structure breaks, the next thing is a reversal. So it breaks here and it reverse. Now this coming week, what are we expecting? When you come to the 4 hours, you see that the market is actually approaching my POI. Okay, so first scenario, what to expect is that the market will take out this liquidity right here, tap on this order block and move downwards to this place first, here second. Then if it breaks here, we'll now know, but it may likely not break it, but anything can happen. But the second scenario is that it will break here, it will break here. So if it breaks here, that means this setup has been violated. If it breaks here, then you come and mark the order block and wait for market to return back to that order block and you buy. So, and before you mark your order block, be sure to identify fair value gap, liquidity, fair value gap, and then order block. If you're able to identify these three things, you will now be able to have a valid order block. Which brings me to remind you of my beautiful trading ebook, The Power of Three. It's a beautiful book. You don't want to miss it. Go check it out. And I equally have another trading ebook where I will give you my blueprint of my secret trading strategy. You can get it if you want. And once you get that one, you will be given another free ebook packed with a lot of life examples and a lot of beautiful things inside with a powerful trading strategy that you can use across all pairs. If you're getting value from this video, kindly like, comment, share this video to your friends.